What's going on, guys? Welcome back to another brand new video, and this may be one of the most disconnected weeks I have ever seen. Look at this. We are just rallying this whole week. We're actually up 13 bucks on the week, which is about 1.07%. But this all kind of started maybe last video on Thursday and Friday. We were just getting slammed with some bad news, and right when we closed off, I was pretty sure opening on Monday and for the rest of this week we're going to be seeing more red. I deposited a little bit more money and I was ready to buy on red, but nope, the exact opposite has happened. So there's tons of bad news. There is some good news on why this whole stock market is rallying. We'll be going over that as well, but to start, we'll be going over some of the bad news and where this all kind of started on Thursday and Friday. So this is an updated article, but this originally came out on last Friday, and Apple is to reclose 30 more retail stores as the coronavirus spikes. So this sent the stock market kind of tumbling for Friday, which also led me to suspect that next week we're going to be seeing more red. And then coupled with the whole bad Apple news, we were seeing rising spikes and rising cases of coronavirus. Now this is pretty big. As I've been saying, we've been going over this the past few weeks, the rising second wave. This has taken a huge toll on the stock market in terms of last week, but this week the markets are kind of rallying off some other news. But this was coupled on Friday, and then over last weekend we had the Fed stress test, which is where the Fed pretty much they have a test and they just kind of judge and assess banks on how well their balance sheets are, how well they can pay out a dividend, and how financially stable they are through the whole downturn. So just yesterday, Wells Fargo announced to cut their dividend, but JP Morgan, Bank of America, Citi, and Goldman Sachs, they're all still going to be maintaining their dividends. So in terms of stocks for the week, it's kind of flat, kind of horizontal. If anything, I would be looking to pick up more JP Morgan Chase, preferably closer to my average cost of maybe under 90, but it seems to just be hitting like 90, 92. So not quite where I want to buy some more shares. And then finally, my home state, California. This is our last bit of bad news, but Governor Newsom closes bars, indoor operations for restaurants in 19 counties, which is pretty much almost all of California. And this whole order is expected to last for 3 weeks. So California is having a big coronavirus spike and it's getting pretty bad. And Governor Newsom has ordered to shut down bars and indoor seating restaurants. So this came out yesterday. I was pretty positive that, all right, markets are going to be super red today. I'm ready to buy on red. But nope, today we are actually up $1.81. So that was a ton of bad news. We have Apple closing retail stores. We had the rising cases of coronavirus cases. We had the Fed stress test. And we had California Governor Newsom closing down bars and indoor seating restaurants again. But there are two pieces of good news that are really driving this whole market. The first one is the housing market. Now, real estate has been doing actually very well throughout this whole downturn. I just saw something on the news the other day that people are like buying houses right away. Like as soon as they're for sale, they're buying. And a lot of people are just looking to sell. They're trying to really cash in on that low interest rate. So the real estate market has actually been doing very well. And in terms of today, the June jobs report has come out and it's looking pretty good. So if we look here for some updated news, 4.8 million jobs were created in the month of June. Economists were expecting 2.9, so that's obviously very great news. The unemployment rate has fallen to 11.1. So this is kind of the news that is driving the market up right now. We have all this bad news, and these two little pieces of good news is really driving and propping up the market. So in terms of the portfolio, I did deposit $100, and I was expecting tons of red this week. But I did acquire two new positions. One is OKE. This is a popular dividend stock. It's got a super high dividend yield. Its yield is currently at 10.63. That is super high. It pays out quarterly, and I figured it was a good time to buy and get into it. Next was Ford. I did pick up one little share of Ford. It was only at $6 when I bought it. I was like, you know what? It's not gonna hurt. Like, it's just $6. It pays out, I believe, 15 cents quarterly. So it's really like kind of nothing. What I saw was mainly my automotive sector in my portfolio was kind of lacking. I was like, all right, let's pick up one share of Ford. Why not? And just to make up for some loss, I did pick up half a share of UTG because this is my biggest loser right here. It's at a loss of $5. So I did decide to pick up half a share. And to me, this ETF is worth it. It pays out monthly 18 cents a month. That is actually higher than my SPHD, which pays out 15 cents a month. I figured, all right, we'll buy half a share of UTG, and then I finally bought the other half of Verizon. Now, I wasn't able to get it at the price I wanted. I preferably wanted at below my average cost at the time of $53, but it didn't work out, and I was like, all right, I've been wanting to buy the other half of Verizon to make the full share. Why not? We'll just do it. So that has been the market for the week, guys. Now, the video is a little early. Again, it's Thursday, but seeing that it's 4th of July weekend, markets are closed tomorrow. So it felt like a good time to go over the portfolio, and a lot of the bad news we were hit with the week that didn't seem to affect the market at all. My suspicion for the rest of today is we're going to be probably trading horizontal. I don't see this going down. If anything, it'll probably prop up just a little bit, but overall, probably just horizontal and flat. My thoughts going into next week, I really can't say. Ain't no telling. Like, I really don't know where the market's going to go. We have tons of bad news, and there always seems to be little drips of hope that are propping the market up. So there's really no telling. If anything, I'm probably going to be depositing another $100 going into next week that I'll probably just use to allocate into my already shares that I own. Like a lot of my losses, like in Amdocs and UTG, maybe I'll pick up another share. SPHD, I for sure want to pick up another share. Don't really care where it's at. I'll probably be doing that pretty soon. But if we start seeing more negative in terms of next week, and we're getting closer to my averages in terms of all my shares, AT&T and Coca-Cola are on the list. Coca-Cola just paid out a pretty nice dividend, so it'd be pretty nice to bring in another half share just to give that dividend a little nice boost. And just to close off the video, guys, we are back here to my overall portfolio on a spreadsheet Google Doc, and I've updated it. We've added the half share of UTG, the other half of Verizon, and we have the new acquired AKE and Ford. So in the grand total, we are looking at $49 per year in dividends. We are so close to that $50 mark. If I can just probably buy just a share of SPHD, oh yeah, we're gonna be over that $50 mark, and it's gonna be looking sweet. So if you're interested in this dividend investing, I do have a video I posted last week getting into the basics and kind of the introduction of dividend investing, what it's all about, what it is, how I incorporate it into my overall portfolio to gain monthly passive income. So that's going to be the video, guys. This was kind of an update and an overall thoughts on the market, kind of all the news coming out, what's been going on, my plays and what I've been doing, what I acquired, and my thoughts heading into next week. So I hope you enjoyed the video. Please subscribe, check out my last week's video if you're new to dividend investing. So leave a like, comment down below, and we'll see you in the next video.